Welcome, dear traders. Yesterday, the US stock market slumped to the worst degree since March 2021. The companies with the largest market capitalization, such as Apple, Microsoft, and Tesla, were especially hit by sell-offs. As a result, the high-tech Nasdaq lost a whopping 4.3%. Commonly, Wall Street makes a serious impact on the trading sentiment in other markets, including Asian ones. Now let's discuss the results of the Asian trade following a slump on the Wall Street overnight. Wall Street investors rushed to sell stocks as they were overwhelmed by fears of a further monetary tightening. They were trying to puzzle out how fast the US Fed would raise interest rates at further meetings. High interest rates pave the way for recession. In other words, a slowdown in the US economic growth becomes more realistic amid global inflation problems, disruptions in logistic chains, and geopolitical jitters. Besides, China imposed tougher COVID restrictions on Monday. The lockdown in Shanghai, with a 24 million population, has been going on since late March, and this has already dealt a blow to the second global economy. So, the prospects of a global slowdown are on the horizon. The question is whether the US Fed will be able to strike a balance and find the right solution to curb high inflation, to maintain economic growth, and not to hurt financial markets. Investors are skeptical about it. Scared by a slew of negative factors, investors are poised to sell stocks. They get rid of risky assets and seek shelter in safe haven assets like currencies and gold. As a result, the US dollar, propped by yields of US treasuries, has been growing for 5 weeks in a row. On a Monday, the US dollar index lost its footing and consolidated in the corridor between 103.50 and 103.77. Still, the index is still not far away from its 20-year highs. At the moment of recording this video, it was trading at nearly 103.66. Nevertheless, demand for the US dollar as a safe haven asset will remain beyond. It owes its strength to the Fed's hawkish agenda. To tame soaring inflation, the Federal Reserve is ready to speed up the pace of monetary tightening. The Bank of Japan is the only one among major central banks that supports the domestic economy by its ultra-soft monetary policy. Japan's finance minister, Shunichi Suzuki, also advocates for the stable forex rate for the yen and does not want to sharp changes in its value. Japan is at the peak of the post-pandemic recovery, but it's wound down by a rally in commodities. So the cautious and predictable Japanese market has nothing to offer to outwine pessimism on Wall Street. Japanese households are now in the thrifty mode. Consumer spending dropped 2.3% in March from a 1.1% rise in February in annual terms. Concerns of a high inflation assured consumers to slash spending on most consumer goods. Do analysts expect any changes in the yen's value? Once the weak yen encouraged Japan's exports, now it increases its huge budget spending on energy and commodity imports. Nevertheless, Bank of Japan Governor Haruhiko Kuroda noted that the weak yen is beneficial for the national economy and will not entail a rate hike. Will the yen retain its safe haven status? Today, it made efforts to gain ground, and it strengthened from 131.45 versus the US dollar, a 20-year low. The yen is also sensitive to yields of US treasuries, and the dollar-yen pair slipped to 129.80. At the moment of recording this video, the currency pair is trading lower. The US dollar has entered a consolidation phase. Ahead of the US inflation data that is due tomorrow, the dollar-yen yen pair is likely to consolidate in the corridor between 129.77 and 130.57. The Australian dollar also dropped to the weakest level in 20 years. The Aussie went down due to a 6% fall in oil prices. The Aussie is vulnerable to the lockdown in China, the largest oil importer and trade partner of Australia. Though the Australian economy is getting back on track rapidly, investors are not poised to buy risky assets. Analysts warned that the Australian dollar could decline deeper against the US dollar and other currencies in the short term on the back of turbulent financial markets. The AUD-USD pair was gyrating in the corridor between 0.69 and 11 and 69.87 in the Asian session today. Follow developments in global financial markets on InstaForex TV channel. Don't miss our next video in a couple of hours. See you soon!